So markets are freaking out today, and basically it's over AI. I want to show you guys what's going on, as this is from the Wall Street Journal. It says, stock market today, fears over new AI tool trigger tech sell-off. And people were just dumping stocks like nuts. How much? 300 billion. Says threat of new AI tools wipes 300 billion off software and data stocks. And you got a lot of names of companies involved. LegalZoom, Expedia, Ares, Apollo. And here's the key line. Shares of companies that sell or invest in software fell sharply. Okay? Shares of companies that sell or invest in software fell sharply. And let me give you some names to get an idea of what's going on. Adobe's down 7%, Salesforce down 6%, Thomson Reuters down 15%, London Stock Exchange down 12%, PayPal down 20%. It's crazy. Then you have Expedia, EPAN Systems, Equifax down 12%, Intuit down 10%. And I'll read a quote here. If things are advancing as rapidly as we hear from OpenAI and Anthropic, okay, so I guess it's more than just Anthropic, OpenAI, it's going to be a problem. Investors are starting to go after any companies that could be disrupted, which is all kinds of software application names, right? And the idea is that if this AI really does work, will all of these companies lose their competitive advantage? Okay. And just looking at the list here, in just my opinion, I think accounting companies will probably be hit hard if theoretically we can automate all this stuff eventually someday. The big one with Anthropic is why everyone's reacting is they come up with some sort of new legal tool thing. I'll read the details. It says, on Tuesday morning, investors homed in on Anthropic's announcement that it was adding new legal tools to its coworker assistant, okay, meant to help automate a number of legal drafting and research tasks. And so you're thinking, okay, if it can do this legal stuff, right, automate legal drafting and research tasks, what else can it do? And would this affect the business of multiple companies? And some people are already saying like this is kind of the idea when we all went online shopping and quit going to department stores and such. Like, is it that big of a change? And you're seeing this, major moves in the market. Get me out. It's the get me out trade. The other trades I've been hearing about is the sell USA trade, right? So you could argue these are related. It's for two different reasons. So the sell USA trade would be more related to Trump. The get me out trade is more like, oh my God, tech is all disrupted. We're not quite sure who's going to be the winners or losers. They're already kind of predicting some losers, but you never know. And in my opinion on this stuff, I think there's a couple scenarios. One is, let's say the AI does work, okay? Then that means basically we're all out of a job, essentially, right? It works, a bunch of people lose their jobs. Let's say the AI doesn't work, then suddenly we invested all this money in something that doesn't work and we wasted all these resources and it was a massive bubble. But either way, I don't think it's great. And I like to read through what people are saying on this, and I want to hear your situation in the industries that you're in, because everyone's in a different situation on whether or not you think the AI is going to basically take your jobs and disrupt everything. So get me out. Traders dump software stocks as AI fears erupt. Wall Street has been skeptical about software stocks for a while, and these have really high margins, these things. But sentiment has gone from bearish to doomsday. Ouch. Lately, with traders dumping shares of companies across industry as fears about the destruction to be wrought by artificial intelligence pile up. But using a lot of descriptive words today. And this is one I hadn't heard before. We call it the SaaSpocalypse. The SaaSpocalypse. That's the apocalypse of software as a service stuff, right? Trading is very much get me out style. And another one says here, AI startup Anthropic released a productive tool for in-house lawyers, sending shares of legal software and publishing firms tumbling. So I guess then if you're a company, we'll just call it Ford, it doesn't matter, then I guess that you can only use your in-house lawyers. You don't have to worry about hiring an outside third party anymore. And I guess that would be the same for accounting stuff as well. Expedia was affected, so I guess we wouldn't use Expedia anymore, theoretically. Video game stocks were also affected because I guess essentially what it is the ETFs, so software companies, they all trade together. So if a big one sells off, then it kind of drags it all down. I think that's what's going on there. But you could argue maybe Elon Musk would say AI is going to revolutionize video games, and according to Musk, he says he's going to make the biggest video game company in the world with XAI. It's a disruption all around. I ask clients, what's your hold your nose level, and even with all the capitulation, I haven't heard any conviction where that is. People are just selling everything and don't care about the price. And the hold your nose level is like, okay, fine, I'm going to buy. It stinks. Hold my nose and I'll buy stuff. But I guess we're just selling everything. And there's a combination too where there's a lot of leverage in the market. A lot of people have borrowed money, so things move very, very quickly when the selling does happen because you're over leveraged. This is a chart here. Stocks at risk of AI disruption under renewed pressure. So now we're mentioning Thomson Reuters, Gartner, FactSet Research Systems, Relics, and Wolters Kluwer. So a bunch of stuff is involved in this, and let's read some more description of this stuff. The first wave of selling was in stocks associated with legal and data services technology, with most software sector and much of the financial technology sector eventually being dragged lower in the wake. Here's a quote. This year is the defining year whether companies are AI winners or victims. Great. And the key skill will be in avoiding the losers. Until the dust settles, it's a dangerous path to be standing in the way of AI. I think I give you an example because before it was mentioned with Adobe, right? So just say, for example, in the future, maybe Apple, make some sort of deal with OpenAI, Anthropic, and I think they're always announcing stuff like that. And then they'll integrate, say, all your photo editing capability in your phone. So then there's no reason to buy Adobe software anymore, right? Just for example, then Adobe's got to come up with a way to convince you to do said thing. So there definitely will be, it's not like everyone's going to, lose out completely. There's going to be some winners and losers with this stuff. But then the problem, I say with Apple, just for example, let's say they say, okay, we got this new phone, it's got all these AI features, and then no one shows up to buy said product. So then you have a bubble there. And ultimately, this is why I use the word disruption, because it's just a lot of things are changing. So it's kind of like going from typewriter to computer. Sure, things change. Because sometimes the Elon Musk fanboys and fangirls, they say, "Oh, Chris, you just hate technology and you hate change." No, I don't hate like advancement and stuff like that. I mean, I get it. Like things are going to change. It is what it is. But that's the question is people are asking today is who's going to be the winners and losers of this stuff, and how much change and disruption are we talking about? So certainly things are changing, and you see it happening in the markets. But there's clearly bubbles in this stuff as well, right? And I like to go through what people are saying. U.S. stocks drops on fears of AI will hit software and analytics groups. Okay, let's see what more people are saying. Here's a quote. Software is getting a shellacking. Okay, that's come from Nomura. Another person. The irony, the hilarity is that everyone was breathing a big sigh of relief on the AI hyperscaler trade after Oracle got funding yesterday. And I think they put out a bond, was it $25 billion? And then there was something else that said that they're maybe going to go for $50 billion. So a lot of this is based on borrowed money. Okay. Quote, the second order impacts of the AI rollout are being felt today, right? So you have different sides of it, be it the software side or the hardware side. All the software players are clients of the hyperscalers. If the guys who are supposed to buy the computing power are being disrupted, that's bad for hyperscalers too. If legal can be disrupted by Anthropic's new tool, then so can consulting and financial services, right? So there's just a lot of question on, again, who's going to be left standing. I guess that's one way to put it. And then you also have other bubble areas of the market. Silver was mentioned here. If some of you guys are in this stuff, Silver's runaway rally becomes death trap for Reddit's retail crowd. And they had some quotes from Reddit here, which I thought were pretty funny. And I'll read the description. So we're talking about leverage ETFs, so basically stuff based on borrowed money. Leverage ETFs were, quote, typically more retail-driven flows since institutional investors could get leverage in a more efficient way. Okay. Many of those piled in have been left bruised. One Reddit user who invested in AGQ close to the silver's record high, so they bought at the top basically, last week said they were sitting on a loss more than $25,000 by the weekend. So that's how much someone lost in a weekend, $25K. I lost a year's worth of post-tax salary today on my entire portfolio. That's what they were writing. Another devastated Reddit user who has been trading silver derivatives products said, quote, they lost a gargantuan amount of money when the metal fell a record 27% in a day. So, and then they're talking about whether or not gold and silver trades like a meme. So you got the AI worries, you got the meme stuff in the gold and silver. And then you have like, you could argue, you could call it the real economy, whatever you want to call it though. But Chipotle stock sinks 11% as restaurant chain reports falling traffic, weak guidance. So we don't have jobs due to AI. Some companies are winners, some are losers, right? Maybe more losers than winners. And then I guess we don't have enough money to go even get a burrito these days. And you guys can tell me how much Chipotle is in your neighborhood. Last time I remember that I've been there, I think it was under $10, but I remember seeing something recently where someone was saying like they went 2 people and it was like $50 or something like that, depending on what you get. So things are expensive out there, and I know that, and it's like it's just too much. I don't have a job anyway, so I can't afford it anyway. But you can say falling traffic, weak guidance. Guidance means like the prediction for the future. And then you have this Bitcoin is crashing. I mean, it's at last couple of months 30-some% down. See right there. And Michael Burry's calling this out, basically saying that if crypto crashes, you have a kind of ripple effect, right? Michael Burry warns of cascading effects from Bitcoin plunge. Great. So we have now this to worry about. Let me read some of this stuff. Quote, sickening scenarios, okay, have now come within reach. And he's talking, if Bitcoin falls another 10%, Strategy Inc., one of the most aggressive Bitcoin treasury companies, will be in billions in the red and will find capital markets essentially closed. So you go down so much and then you can't borrow more to bail yourself out because, when in doubt, when you lose, just borrow more, I guess, is a strategy. And it says the digital currency has shed more than 40%, so even more than 30, since the record high in early October. And now analysts have cited a confluence of factors for its drop, including vanishing inflows, so less people are putting money into it, shrinking liquidity, less money out there, and a broader loss of macro appeal. It's just not that cool anymore, right? A number of crypto native traders are also cooling on the token economies that we're calling this thing, gravitating towards event betting as prediction markets take off. Interesting. So I guess we're not so into crypto anymore. Now we all want to bet on, whether it's going to be Groundhog's Day or who's going to be the next Fed chair or who's going to win the Super Bowl or whatever. So it's all gambling market, basically. There's no other, but it's all gambling. Quote, there is no organic use case for Bitcoin to slow or stop its descent. That's from Michael Burry. Like there's no reason why you should buy this stuff. The token's adoption by corporate treasuries and new crypto-linked spot exchange ETFs, basically, is not enough to buoy its price indefinitely or prevent devastating consequences if it falls dramatically, he said. This was key. I didn't know it was this many. Nearly 200 public companies hold Bitcoin, he noted. I didn't know it was that many. I think Tesla still has some and, various companies out there, but I just didn't know it was that many. Well, that's helped broaden demand. There's nothing permanent about treasury assets. Great. Here's another quote from Burry. It looks like up to 1 billion in precious metals were liquidated at the month's very end as a result of falling crypto prices. Okay. If Bitcoin were to fall to 50,000, so it's at 75 right now as of recording. If it were to fall to 50,000, miners would go bankrupt while tokenized metals futures would collapse into a black hole with no buyer. Okay, so that's that. You got the crypto bubble. And then you have Jensen Huang over at Nvidia, and there was reports in the Wall Street Journal and Bloomberg and otherwise saying that the deals were cooling off that he made with OpenAI. Now he's trying to claim that there's no drama. That's literally his quote here. There's no drama. But I would put what he says with a grain of salt. These are situations where I trust the reporting over not necessarily what a CEO says. According to Wong, though, I just do tell you what he says. Quote, there's no controversy at all. It's complete nonsense. We love working with OpenAI. And I think the number that was being thrown around is like 100 billion. What's going on with that? They were supposed to be building a bunch of these Stargate things, they called it. And there's been a lot of reports and stuff where you're not even really great breaking ground, and then there's fights over who owns these things. And I think SoftBank is also involved with this stuff. And then you got other reports that Oracle keeps wanting to borrow more money. And you have to put this all together. That's why I said that there's a couple scenarios. So one is the AI works, and then you're all out of a job, and then some companies win, many more will lose likely. And then if it doesn't work, we invested all this money into this thing that doesn't work. We wasted money on said thing. We all borrowed a bunch of money to get in said thing. And then, there's got to be someone to pay, right? And no one has any money. And so then you have Trump as president, and he's just all in everything just for the grift. As long as you put money in his pocket to build his ballroom, you keep this sort of bubble economy going. But if all these companies are getting hit today, was the ones that said it was like if you sell or invest in software, you're in real bad shape today, at least according to the markets. And that's why we're watching this stuff together. So do be careful out there, guys. I want to hear your thoughts on this. And I think the key question is, which industries do you think, if AI does work, would actually really disrupt it? My opinion, I think the accounting one is a big one. Customer service, I mentioned several times on the channel. I don't believe in the Elon Musk where it's going to replace all doctors. I think you're okay there. I think you're okay in the skilled trades for now. But we'll see. So I'd like to hear your thoughts on this stuff though, and I'll catch you on the next video.